Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone. This episode is part 2 of Stephanie Wickham's chat with Alexander Marino, a Director of US Tax Law at Moody's Tax. If you missed it, scroll up in your feed and listen to part 1 first before jumping into this episode. Renouncing US citizenship has become more popular with expats today, with many of them moving to or retiring to Ireland. With the US and its complex global tax system, it can be a burden to those looking to live abroad. Cross-border taxation is no joke, and this is where Alex and his team come in. In this episode, Alex shares some of the major things expats should look out for if they're a citizen or have a green card, what the US exit tax actually is, and how you can get started with this process for yourself.
Just generally speaking, I suppose, we would have a lot of clients as well who are US citizens who are residing in Ireland or perhaps long-term green card holders. What issues do you generally talk to people about with respect to their tax bill before they've gone through the renunciation? So you're already abroad, you're a US citizen, you're a green card holder. What are the kind of top 3-4 things you want them to be aware of about their tax affairs?
Yeah, I mean, the top 3 or 4 things that we would want them to be aware of is it doesn't have to be like this. It doesn't have to be a situation where you're loading up the non-US citizen spouse to hold all the assets and praying people die in the right order. It doesn't have to be a situation where you're not maximizing your wealth in the jurisdiction you're in. It doesn't have to be a situation where you're constantly stressed out and this is what we see most. And you could have the best accountant and the best tax lawyer there is. They don't control Congress and they don't control the jurisdictional parliamentary authority in the country you live in, And this is what's so frustrating is you can be paying those lawyers, those accountants for that maintenance. And then boom, Donald Trump comes in and passes a transition tax, which is a one-time so sorry tax on your non-US privately held company if you're an entrepreneur. Or a guilty tax. It makes you sound like a criminal, but it's spelled differently than the verdict guilty, Global Intangible Low-Income Tax Initiative. Or whatever we're going to see out of the big, beautiful bill in the next 3 weeks. Or the Biden administration comes in and under the Inflation Reduction Act gives the IRS $80 billion and 87,000 new IRS agents for onshore and offshore tax efficiency and enforcement. Or the Obama administration comes in and enacts FATCA, which is why we're all here today. U.S. citizen-based taxation has been around for hundreds of years. They couldn't find you till FATCA. So this is where the mismatch and different vehicles in different countries, people have a common misconception where they say, oh, Alex, I don't need to worry about it because I live in a country that taxes a lot and has a high tax treaty. And I say, well, you need to understand how a tax treaty works. A tax treaty works wonderfully if you're living in Ireland and you make a 100, let's just say it's convert to US dollars, $100. And the tax authority in Ireland says they want 35. The US wants 25. Do you owe 60? No. There's a tax treaty between the two countries. You pay Ireland and you get an FTC, a foreign tax credit to offset the US down to 0. Wonderful. But that's 75, 80% of the time. What happens when you have a non-taxable event in Ireland, but a taxable event in the US? Sale of your principal residence, ETFs, mutual funds, incorporation. Donald Trump tax, Joe Biden taxes, big beautiful bill taxes, taxes that don't exist in the country you live in. Well, won't the treaty help me? No. The treaty helps avoid double tax. When one country doesn't tax you, i.e., the country you live in, but the US does, that's a single tax. And that's where you have to get your checkbook ready.
I suppose as well, from an Irish perspective, what we commonly see, US clients come and they don't realize it, particularly if they've, for whatever reason, remained taxable in a specific US state, that our treaty doesn't cover that tax. Now, obviously, you can still be a US citizen and not paying that, depending on where, the fact pattern. But the point being, it plays exactly to the heart of what you're saying. There can be this overarching feeling of, oh, well, it's okay because of this reason. You're entirely right. We have cases like that where, for whatever reason, we have a principal private residence relief exemption in Ireland, very similar to the one that you alluded to in the UK, which would give rise to a liability in the US under US law, but nothing here in Ireland. So it is entirely something to consider. I suppose in the run up, the US doesn't just let you go, does it? There is a potential exit tax. Can you talk to that slightly?
Yeah, whether you're a long-term permanent resident green card holder or a citizen renouncing, Code Section 877 Cap A governs the exit tax. So our job is to take a client who's either a dual citizen or more, or a green card holder, and navigate all the landmines along the way over a 2 to 6 month period where they come out treated like any other citizen of their fallback passport, no better, no worse. And one of those hurdles is exactly what you just indicated, which is avoidance of the exit tax. Well, first of all, what's an exit tax? An exit tax is a deemed disposition of everything you own in the world, but you didn't really sell it. That's bad. What we do, and there's two types of people when you're done properly, or when you're renouncing US citizenship or terminating long-term permanent resident status, it can end one of two ways. You can either be a covered expatriate, which means you didn't do it the right way and the exit tax applies, or you're an expatriate, which means you followed the rules correctly, planned accordingly, and the exit tax doesn't apply. One is an amicable divorce, the other is not. So what we do with 99% of our clients is we avoid the exit tax, avoid the inheritance tax, retain benefits, make sure you can access the US, no travel restrictions. We get rid of all the bad, keep all the good. And right now is the best time in history for individuals to look to renounce and avoid and terminate green card status and avoid the exit tax, because one of the criteria is and there's multiple, is a net worth test. If you're worth a certain amount. And there are gifting exemptions under the Trump administration that right now, for US purposes, which have never been this high, we could properly plan and avoid the exit tax for individuals in the 15 to 17 million range or lower. If Kamala Harris would have won, that number would have dropped to 3 or 4 million. So it's the heyday of planning to avoid the exit tax for higher net worth persons. Now, of course, we have clients, and God bless them, that are worth, many times that. Why would somebody worth $100 million renounce? Well, because in those situations, we'll purposely walk them into the exit tax with proper planning, pay $1 million, $2 million exit tax, which is a whole lot better than dying and paying $40 million in estate tax.
Mm-hmm.
So what I always tell clients is, in determining whether to renounce, it's not a zero-sum game analysis. What it is what is the cost to go through this? Usually legal fees, a government fee of $23.50. We charge somewhere around, your average file is about 8 to 10,000 euros to renounce. And we ask ourselves, do we want to pay 10,000 euros over the next 6 months in legal and government fees? Or are we better off spending the next 40 years of our life getting double taxed? And there isn't a person on the economic scale where the answer isn't better economically to get rid of it, but at the same time, it needs to be done the right way. We want to come out of this completely unscathed, almost like it didn't happen, to the point where if we're falling back on our Irish passport, we're actually better than your standard Irish citizen only who was never American and renounced, because we'll still have our social security number
Yes.
to use in the US, whether it's bank accounts. It's a very interesting area where both economics, emotion, politics, family all coincide.
And I think, we're probably back to where we started, which is like taking all of that into account. Don't put it into the too hard basket. Ask the question, do the sums, and then speak to the experts. Because, even listening to you and we do this every day, but obviously, we work with some clients who are renouncing, limited, to be honest, more, handing back green cards. And, our advice always is, get US advice, be careful. Do not sleepwalk into a problem. Perhaps the rhetoric is, there are opportunities here that you may not yet have considered. Sometimes flipping the narrative of this is an extreme thing to do because of an extreme view, it actually might be a very financially sensible thing to do when all facts are considered.
Yeah. And especially when we have green card holders, you bring up a really good topic with the green card holders, because green card holders say, oh, my green card expired. I threw it in a drawer 30 years ago. Well, that doesn't mean that you're still not taxed. That means for immigration purposes expired. But I always tell clients, just because your US passport expired, does that mean you're not a US citizen or an Irish citizen or a Dutch citizen? No. It means you need to renew a piece of plastic. So our green card holders can get wild surprises and find themselves in the same soup tax-wise as citizens. But I agree wholeheartedly. The last thing that you want to do is put your head in the sand. Nothing good can come of that. It gets harder year over year. I've been doing this 12, 13 years now, and I've done thousands and thousands and more than any human being on earth by a lot. And I have never had someone come to me and say, I'm really glad I waited. Things got better. Laws get harder. Governments are more bankrupt on wherever you're living or citizen of.
Mm-hmm.
The different administrations, legislation, just in renouncing alone, that $2 million threshold to avoid the exit tax is one of the only non-inflation adjusted numbers in the Internal Revenue Code. It's been 2 million since 2008. Do you know how much easier it was to renounce and be less than 2 million US dollars in 2008 than 2025? So nothing good comes of waiting. I always say the worst thing that happens is we have a conversation. You at least, whether you decide you just can't give it up or you decide you want to give it up tomorrow, you can stop walking around with a blindfold on and at least know where you are, where you stand, what you want to do. And if you want to keep it, at least you know the hits that are coming.
Mm. Alex, there's going to be a lot of people listening to this who either are on the fence, not sure about a decision. Two things I'd love you to share so that we can drop them into the show notes are A, how do people contact your team? Who's the best person to reach out to? And B, is there webinars that are easily available online that people can purchase or access if they have questions before they actually formally engage you guys?
Absolutely. To the first question, it would be myself. So Moody's Tax or Moody's Tax Law is the firm. My name is Alex Marino, of course. You can just Google myself, my email, AMARINO at moodystax.com. We do webinars on this. In fact, as I mentioned, I'm doing one for Europe, UK, and the Middle East this Saturday morning. It's a 2.5-hour webinar, which is literally a deep dive into everything that is renouncing, keeping it, compliance, amnesty programs, who's American, who's not, misnomers, legislation. It's a live webinar. And you can ask questions on the fly. There's a giant screen in front of me at a studio. So I'm answering them live as we go. If you can't make a live one, completely understand. You can email myself or reach out and we send a recording of it. And we don't charge for this. We're not hiding the law from anybody. We want people to be educated on what this is. And then if they think, hey, look, this might be something that, at least want to talk with Alex about, we set up consultations and run through hard numbers. As I jokingly say, there's two hurdles in deciding whether to renounce, whether you're worth $100 or $100 million. Is there any emotional attachment keeping you from a sound economic decision? If no, is it a sound economic decision? And for 99% of you, the answer will be it's a sound economic decision not to be taxed by two countries. But let's work through the issues. We're not jumping in the deep end without our swimmies on. And yes, myself, we have a whole team of US lawyers, my assistant, Catherine. We can get you a recording of the webinar. Can't ask live questions, of course. Or you can book up for one of the live sessions in the jurisdiction that you live in. And then, you can pepper me with as many questions as you want.
I think you'd be well able to field them. This has been such a good chat. Thank you so much. I've genuinely enjoyed and I've learned too. So I have no doubt that people listening to this will really get some valuable information. Thank you so much for your time and for joining us. It's difficult to align calendars when we're in different countries, but we really appreciate you taking the time to speak to us, Alex. Thank you so much.
Oh, thank you. Thank you for having me.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.